Good afternoon, everyone, and thanks for coming to listen to the presentation here. I think it's an exciting time for Integra. This is the first time we've ever presented at this conference as a producing company. So it feels good to be here generating cash flow. And I think you'll see, based on the presentation I walk you through, the company's gone through a material transformation in the last year, moving from development stage to production stage. So before we get into it, I'm going to direct you to the cautionary note that's available in my presentation and also on the website. So on slide 3, you can see an overview of the portfolio, and top left has really been the star of the show for us for the last year with the acquisition of Florida Canyon. We paid $65 million US for it, and the mine had $35 million in cash by the end of the year. So on a net basis, you really can't do much better than that for precious metals M&A. And what we are trying to do is build a mid-tier precious metals production company. We've got the assets to do it. We now have a team in place to do it. And I'll walk you through the strategy of how we think we're going to get there. So if you take a step back and look at what we've put together, it is a growth-focused precious metals producer. We have production and cash flow from the Florida Canyon mine, and that cash flow we can use to support the advancement of Delamar and Nevada North. We have a built-in growth pipeline of complementary heap leach assets, and really what that does is underpin an industry-leading growth profile. We have significant resource scale across the 3 assets you see on the right-hand side of the slide. There's over 7 million ounces of gold equivalent in the M&I category and another 3.1 in inferred. Last but not least, as far as referring to the maps, we're located in what we believe to be one of the best mining jurisdictions in the world. We think we're in the right place at the right time, not only for growing our production platform, but also for advancing our development stage assets. As I talked about, we've added to the team in the last year to reflect where the company's gone from development to production. And I think we do have the team and the backing from our shareholders to really drive this value proposition forward and ultimately achieve our goal of becoming a mid-tier producer. Last but not least, for the investment community, we still traded an attractive valuation. The catch-up trade that I've been talking about for a year is happening. The share price is up 200% over the last 12 months. And in my view, we'll get to it, but I think there's another 40 to 50% of upside in alpha that you can achieve outside of the peer group. Again, if you look at the right-hand side of the slide, it really nails down the point of how focused this portfolio really is. You can get from Florida Canyon to Delamar in a 3-hour drive, and Nevada North is about 26 miles west. So we have bolstered the management team. I'm going to focus my comments on some of the updates that have changed as part of the recent transition to production. So we've added Cliff Lafleur as our COO, and he's going to oversee basically everything we're doing from an operational perspective at Florida Canyon, and also driving forward all the technical work as it relates to Delamar. We've also added Sean Deisner to help build out the finance and accounting and reporting platform of the company, which was much needed as we made that transition to production. Last but not least, another big addition we made was Dale Kerner. As we really move into the federal permitting process for Delamar, we needed someone to really be the champion in Boise, and Dale comes to us from Perpetual Resources, where he helped them get their record of decision recently for Stibnite. So, in our view, if we could have landed one person to help us drive this forward from a permitting perspective, Dale was the guy, and we're very happy to have him on board. So if you look from a high level at our 3 key assets, you'll notice they're all very similar. All heap leach operations, all low sulfidation epithermal deposits, all about the same size and scale. And we think that's going to be a huge advantage to us as we look to both leverage off the capabilities at Florida Canyon and use those capabilities to help develop Delamar and Nevada North. So as I mentioned, Florida Canyon we purchased in 2024. We've only reported 2 quarters of earnings. We're generating free cash flow. The mine's operating as expected. We're certainly happy about the higher gold price as it's allowing us to generate greater free cash flow than expected, support the development of Delamar and Nevada North, and really give us a little bit of breathing room from a couple of tough years as a development stage company. So it supports our $63 million cash balance right now that we are deploying to help drive our strategy forward. As we move on to Delamar, located in Idaho, there's a PFS study that was out in 2022, 8-year mine life, about 140,000 ounces equivalent of production. We're going to be updating that study this year. We're going to be releasing a feasibility study in the fall. We're driving this asset forward from a permitting perspective. We received a completion notice on our record of decision. Wish we got the record of decision. We received an approval from our mine plan of operation, which we submitted earlier this year. So the BLM signed off on that. We're expecting to move into federal permitting later this year. And look, like we know permitting is not going to be an easy journey, but what we pride ourselves on is we have one of the few assets that will be permitted and will be in production in the U.S. in the next few years. And compliments to the team at Liberty. They're doing what we're doing. We managed to bring on production, but we're all cheering each other on as we look to advance these projects in the United States. Last but not least, we get sort of the second leg of growth from Nevada North, again conveniently located 26 miles away from Florida Canyon. We're doing a little bit of work there. We're finding ourselves continuing to revisit the budget as the gold price continues to move up. And so we're going to be doing some metallurgical and geotechnical work to allow us to continue to pull that project along from an engineering and permitting perspective. So on this slide, I think it really highlights the thing that sets us apart from some of our junior producer peers and certainly the developers is really the growth profile. The three assets in series, and again, the more work we do on Florida Canyon, the more belief that we have it's going to be producing for more than the current reserve life. But all three assets create a 20-year mining platform in this part of the United States, something that most other junior companies cannot point to. Another thing that we really pride ourselves on is the 70,000 at Florida Canyon. Within our portfolio, we can take up to 300,000 ounces per annum of production once Delamar and Nevada North are brought online. So I'll quickly touch on the outlook for Florida Canyon. We're proud owners of 2 quarters now, so we're still getting our handle on the operation, but we've been pleasantly surprised by the consistency of it. It's producing quarter over quarter, steady state. That's something that we really were relying on as we were making the transition from development to production. And what we can say is it's doing its job. And over the last couple of quarters, I think we're gaining more and more confidence on our ability to grow that asset, to work on the cost profile. We knew that 2025 and 2026 were going to be capital heavy years. We're catching up on some capital that was put off over the last couple of years as it relates to refurbishment of the fleet. We're doing some pre-stripping, a fair bit of pre-stripping, and we're building a heap leach pad. We did half the pad last year and another half this year. So in total this year, we're going to be investing over $50 million back into the mine. We're happy to be doing it in the gold environment that we are. And what we see is investing now in this year and next year is going to set the mine up for long-term profitability that we see 2027 and beyond, which aligns quite nicely with when we're going to be project financing and building Delamar. So I'll touch quickly on the growth. Florida Canyon, again, the more time we spend there, the more ability we see near the mine via some of the old waste dumps. There's lots of material there that we're drilling. We put out results over the last couple of weeks. And then also the inner pit areas, so some of the areas between some of the existing pits where we're going to continue to drill. We're allocating $10 million this year on growth capital to support these initiatives. And then the second leg of growth would really be from a regional perspective. Florida Canyon mines up here, past producing standard mines down here. You got about 5 miles there that's been largely underexplored over the last few years. From a corporate perspective, the size of the company has significantly grown. We're about a $450 million market cap as of today, with a cash balance of $63 million. So by far the strongest position we've ever been in as a company. Well covered from an analyst perspective, 6 brokers, and I think average target price is 50 to 60% up from where we are today. So we've had a good run, but my view is there's still a fair bit of catch up for the valuation to go. From a shareholder perspective, about 50% owned institutionally. We've got strong strategic shareholders, Alamos, Wheaton, Beatty, and really the rest of the institutions have been with us since we were a development stage company. Another thing I'll comment on is the trading liquidity. It's significantly picked up over the last 6 months. We're seeing most of that liquidity come out of the U.S. We're listed on the New York Stock Exchange American, and it's really supporting our efforts to be included in more indices, and we're targeting GDXJ inclusion by the end of this year or early next year. So if you take a step back and look at kind of where we sit on the junior producer landscape, again here with about a $450 million market cap, where we really think we punch above our weight is the number of gold and silver ounces that we control. Again, just over 7 million ounces gold equivalent M&I and another 3.1 in inferred. Last but not least, you can really see what the growth profile looks like in the context of the peer group. 70,000 ounces, you add on DeLamar, you're north of 200,000, and Nevada North can take you up to almost 300,000 ounces per annum. Those are assets that are in the portfolio that we are advancing as quickly as we can. From a valuation perspective, we currently trade at 0.34 times price to NAV. I was doing this presentation last year talking about the re-rate that we saw in the upcoming year. It's happening. And I strongly believe that we still have another, like I said, 40 to 50% to go just to put us in line with where the peers are. And if you ask me where I think we should trade from a valuation perspective, somewhere between your top-notch, good jurisdiction developers and your junior producers in a good jurisdiction. So where I see us going, we should be at 0.5 to 0.6 times price to NAV. And so that's where I kind of get my math for the upside that I believe is still in the stock. So next steps, corporate timeline. I'll go through it asset by asset so you can kind of know what's coming. Florida Canyon, it's going to be continued consistency operations, generating free cash flow, significant reinvestment, and you'll see that in our quarterly reporting. We think we can optimize the asset. We're going to aim to put out a updated technical report next year, which will reflect the optimization studies we're doing, the growth drilling we're doing, and really be Integra's first document that represents what we think we can do with this asset. As we move to DeLamar, we'll be putting out a feasibility study later this year that will incorporate the stockpile drilling that we did in 2022 and brought into a resource in 2023. And really the other big catalyst at DeLamar is federal permitting, one of the few assets that will be actively moving through federal permitting in the United States. Nevada North, it's non-sexy work that no one's going to really care about, but important work that needs to be done to continue to advance the asset so that we can move it forward from a technical and permitting perspective to allow us to achieve that growth trajectory. And last but not least, we continue to bolster the capital markets profile of the company. As I mentioned, we've got our sights on the GDXJ. In the next few months, we meet all the trading requirements, the market cap, all that good stuff. And so we're ready to allow the company to move into more of those generalist passive funds. And I'll just quickly reiterate what we think to be the real investment thesis here. You've got production and cash flow. You've got a built-in growth pipeline. You've got significant resource scale. You're in what we believe to be the best mining jurisdiction, at least for the next couple of years. And we have the team to execute on these initiatives. And from an investor perspective, again, we think that we're still there at an attractive valuation and still lots of upside in the stock. So I'll leave it there and open the floor to questions.
We don't have very much time, 20 seconds.
20 seconds.
Anybody with a quick question?
what's a successful feasibility study at DeLamar look like?
I think it's something that reflects a mine that we can build and that competes with anything else in the U.S. as far as capex ratio to NPV. We're looking to target IRRs in the high 20%. So we're looking to really maintain a strong PFS that we already had, bring everything current as far as costs go, update the metal prices, and bring in those stockpile ounces. Thanks.
Jason, thank you. Good luck